So we can begin with the question and answers directly, if that's fine with everyone.
But I think from the beginning, uh, thank you for taking time out and meeting with us. Uh, we want to give more time, surely, but then, we try and see how we can do better and better. And I really appreciate you people being here. Thank you once again.
If I may start, right?
Yeah, sure.
Hi. Just on the export piece, right, where we've seen this weakness last few quarters, and I remember maybe a quarter back you said, as we get into CY 24, things will start kind of bottoming out and start looking up. So if you could just kind of help us, how are you seeing the year start off? If you talk about some of your key geographies, EU, Germany is a bigger one. And also, there was some discussion on how you want to offset the weakness in EU and US from the Southeast Asian countries, right? So just a broader picture, how do you think CY 24 looking on the export front? Some of your key markets, and new products which would come to us. Just some.
Yeah, so whatever we saw in Q3 and Q4, that continuous decline, at least that is stagnated now. So we are not seeing, based on the current order book of 6 months, we don't see a further decline in that. Having said this, you rightly said that we are looking at Southeast Asia, and but businesses cannot be one from one day to the other. But with our Asia Pacific colleagues, we are working on Southeast Asia countries. That even in future, that how we can have this compensation from other locations. So we are exporting to Vietnam. Indonesia is in pipeline, and so we are working on those compensating measures, that we are not having over dependency only on Europe.
Right. So it's more of a bottoming out, but no quick revival is what you're trying to tell us, right?
Yeah,
At least
that
the
we
next
don't
6
see
months.
that as yet.
Not yet visible.
Okay.
Rightfully, I think the situation there in Europe is still what it is, or what it was. But that said, on the economic growth front as well, you're beginning to see some pressures there in Europe on their own growth. So that's, I guess, is kind of compounding the fact that even if there is a recovery, will it recover because of the GDP growth rates have come down drastically compared to the rest of the world. So that pressure is something we are now seeing as well. But as of now, the indicators for us is it's kind of flat. Yeah.
And is it getting further compounded because of the supply chain issues of Red Sea and stuff like that?
Supply chain issues, what we see and believe is that these are very momentary. Okay,
Yeah.
it doesn't have a very long time span like what we have seen due to the Ukraine war. Uh, Also, the flip side is what we see is when the supply chain issues happen, the cost goes up.
Right.
More than anything else. It's not like the demand goes down. The demand is still there. It's
Yeah.
just there's an interim blip, and that we experienced. But we did have a similar situation. I think last year when the Suez Canal was blocked by a ship for almost a month, it impacted the supplies. But all it did was the cost went up because we had to find alternate routes, we had to ship it by air. So it didn't kind of destroy the growth.
Yeah, so
Yeah.
we are seeing the same situation right
we,
now.
we did see now, especially with the Red Sea crisis.
Correct.
But last I heard, the situation is a lot better than what it was a month ago.
Okay.
Yeah.
Okay. And is it also in any manner leading to, in a very perverse manner, like, is there a tendency to sort of build up inventory more than the demand is?
From our
From
customers and you
end
mean?
customer.
We have not seen that
You
happen.
have not seen.
We have not seen that happen.
Sir, we have seen the parent numbers declining further. The pace of sales has declined further in the last quarter versus the previous quarter. So, is it a lead indicator for us or a lag indicator? Would they actually start lowering down their orders to you now, or they would have already done in the previous quarter?
First and foremost, I don't know, you're referring to the group sales.
Group sales.
But actually,
It was better.
better. We have performed better.
China, US, and
No,
even some parts of Europe.
no, because last week itself we announced the results for last year, we have done much better than what we expected globally as well.
Okay.
In spite of all the difficulties, in spite of the war. So even it was better than the estimations we had
Actually,
made.
I was referring to more of an industry because for SKF, Timken, because
Ah.
Schaeffler numbers were just out, so I was referring more as an industry rather than Schaeffler
Okay.
specific.
Okay.
Okay. Globally, I'm not able to comment on that. But standalone as Schaeffler, definitely the numbers are much better than what we had expected it to come out globally. We've done that much better.
But sir, in terms of end market, can you see how do you end market in industries and auto for exports, and within industries which the segment?
No, first thing is there's no end market. We don't deal with the customers abroad. When we talk of exports, our role stops when we ship this to our own sister concerns in that part of the world. That's it. I have no control on the market there because they handle the sales of that.
But mainly it goes into the auto segment or industrial.
Well, a lot of it is industrial.
So is there any cut in capex now that we are seeing a slightly muted outlook on the export side? Or the plans which were there for the exports capex still there?
Up until now, we
are.
have not cut any capex because our belief is whatever situation we are going through is not a permanent situation that's going to remain like this, right? So India is growing. You have seen the numbers of India's own growth in terms of GDP, the fastest growing country on this planet today. That said, rightfully, even the geopolitics is favoring that India should be the place. So, whatever strategy we as Schaeffler look at for India, in India, is long term. It's never short term. So, we are here to stay invested, correct? Yes, these ups and downs would be there along the journey. We will have to find ways how to navigate through this crisis. So as Hardevi rightly said, we are looking at even Southeast Asian markets. We have been fairly successful in getting some wins there. Is that enough? May not be. Do we need to do more? Of course we need to do more. Our efforts have to be more to go out and talk to the other Schaeffler entities in the other parts of the world to grow the business for us so that we have a kind of a diversified base for exports. We'll have to do that. It's a lot of hard work. Sitting in India to do that is something, and we have never done this before, by the way. So we are also learning how do we do this. We are doing it.
By the end of this fiscal, we will see that one of the major players, Timken, they are now going into spherical and roller bearings, which will be directly competing with us. Do you have any plans to counter this, or will it not impact us as much?
I think we don't need a plan to counter because we have been proactively on this journey ahead of them. Sphericals, we have done the maximum localization is on the spherical bearings. We've been doing consistently over the years. Yeah. Well, I know that when we heard this news, I said, okay, competition also wants to catch up. No harm in it. It's an open playing field. So our localization content, if you were to see 5 years back and where we are today, we have gone up 6-7 percentage points. We are at 75 odd % now, and we will continue to increase our localization content. It is fitting in well with the Make in India as well for us. So it's important that we make here and supply here. So there'll be more products that we will keep on adding. I think as I am speaking, there are a few more spherical rollers that are getting localized as well. So we will continue on this journey, irrespective of what the others are doing.
Your outlook on railways for the next 3 years?
Railway is definitely an important sector, and now that we see a lot of action on the railway sector as such, with the modernization that is happening, we believe there are opportunities for us as well. Rightfully, we are playing to our strengths in this sector, and we are very strong on the metro trains, which are going into tier 1 and tier 2 cities. We are very strong on the electric locomotives, yeah, and that's exactly fitting in well with the straight railway strategy to become 100% electric. I think at last count they must be having about 80 diesel engines left, which are still running, which they are phasing out in the next 1 or 2 years very soon. So it's good to see that railway driving this electrification strategy, which is the larger purpose being to address the carbon emission, or the carbon neutrality initiative, which is very good. That's our belief as well, that we must work in that direction, and we are doing it. So that said, locomotives, we are strong. We have a very good portfolio there, and a lot of it is local portfolio. Again, we make those products here. Talk about passenger trains, with the step up in the quality and of the passenger trains that we see. We hear Vande Bharat's getting launched everywhere. Again, that's electric, so we gain there. On the passenger wagons, we are playing the game already. Freight has been one of the challenge areas for us, because the freight cast technology has not yet evolved there, but I'm sure that's also catching up now. Our next generation of bearings that we have for the axle boxes on freight cars, I'm sure we'll continue to make some inroads there as well. But otherwise, all in all, we have a good story to tell on the railway sector. Yeah. Yes, we have some small gaps on the freight cars, which we will address as we move forward.
So yield would be what, 10% right now, approximately?
About 7 to 8%.
Still, and if you could also talk about the wind side, because I know in the last couple of calls you talked about the recovery on the wind side after the lull, right, that we saw. So again, wind would be a similar 7-8% of the top line, I'm assuming?
Yeah, a little more, I guess, about 10%.
Okay. So if you just over the wind sector, also the process industry, just trying to understand some of these bigger sectors for you,
Yeah.
how they're playing on.
So wind had a kind of a checkered development over the last 2 years. If going back to 2022, the second half was when the first half was when the war started in Ukraine, and the second half we saw the real impact of that coming onto the wind sector. Fundamentally, this was because of all the projects that went into hold in Europe and other, Central and East European countries, right? With the sanctions getting imposed, obviously, none of these projects got executed there, and as a result, the entire value chain got affected, right? And as you know, the wind equipment manufacturers, and almost all the global players are in India today. They are using India as a manufacturing base to export back to their home countries, probably. At last count, almost 80 to 82% of the production is exported out of India. India's own consumption of wind equipment is very small. It's all going out of the country, right? And that got impacted, and that's a huge impact, correct? But come into 2023, the first half of 2023 as well, we saw the demand not coming back as such. But 2023 second half, Q3 onwards, we began to see a bottoming out and an upswing. It was already on the upswing. And even this quarter, this year, we are seeing pretty good demand back in the wind sector. So all in all, wind went through some tough times, strong headwinds. The wind itself faced headwinds. I think it's bottomed out, and we hope this is going to sustain going forward as well. And I think one more quarter should be kind of giving us the more confidence on the sector stability.
Are you also seeing a pickup on the domestic wind, Nancy?
Domestic wind has always been stable. We have never seen a drop, irrespective of where war broke out, what happened. We have never seen a drop, but then domestic wind is hardly very, very small. 15 to 16% of the total wind produced is only domestic. The rest is all exported out. So it's not a big market.
How is the competition within the wind sector? Because one of the peers said that they want to exit this thing because of the low profitability.
We want to exit?
No. One of the peers said that
Ah,
some of market.
I
Who is
can-
that localization is helping you in some extent in Saudi plant, which is helping you?
So let me lay it out for you. First thing is our presence is very strong in the wind sector, and for multiple reasons. One, because of our product performance, right? And we have very credible performance over the years, and we work with all the global players, by the way, and that is standing very well for us. Number one. Number two, it's in our strategy that we will continue to focus on the wind sector It's close to our heart because we have a target as an organization to become carbon neutral completely. So rightfully that's a sector we should be generating and supporting more as well. So we are doing that. The third is our investment strategy has been consistent, and we continue to invest in this sector as well. More investments are going to come in this sector. As the wind equipment specifications change, we are also gearing up for the new products as well. So for us, there's a very clear strategy to grow in this segment. I cannot speak about the others, what their strategy is about. Yeah.
And so on the other process industries, steel, cement, the other process industries, how is the market?
The process industries also we have seen pretty good growth, I must say. Obviously, this is coming on the back of the push from the Government of India in infrastructure growth. Clearly, we are seeing steel, cement, and some of the construction equipment industries doing very well, and that is boding well for our business as well. And all indications are this year too, even in the interim budget, there was a high focus on infrastructure again. So this, I expect this trend will continue.
Globally, how does a parent take decisions on whether they want to move production from one geography to another, manufactured in Poland or China or India, and therefore how should one think about implications on exports for you?
Do you want to answer that or should I?
Yeah, anyone can. Globally, we are in a phase of dual transformation. And wherein, if we talk on the automotive side, Europe, Korea, Japan, they are moving faster towards EV or hybrids compared to India. So for group, they have to stay invested in ICE for many more years in India, and on other side, in other geographies, they have to focus on e-mobility.
Okay.
So accordingly, the decisions are taken also from China plus one strategy point of view, where the customers are moving, where are Hyundais of the world, Kias of the world placing their bets on. They have to move closer to them. So group has been increasingly investing in Vietnam, Mexico, India, which was not the case 5 years back. If you saw our capex as percentage to sales, it was below 5%, and we are now inching closer to 10%. So the strategies are evolving based on the ecosystem of the customers.
Okay. So, but that would mean that if you're looking at where the world is heading in favor of EVs,
And also the
shouldn't-
technological, like Europe wants to use its spaces, its plants more now for EV. So they will free up the space and transfer those technologies possibly to India, Mexico, Vietnam, and those countries, which will continue. Like we know that Southeast Asia and India will continue on ICE for another decade at least. And also, if you see, we are passenger cars, for instance, in India is over 5 million cars. And CAGR for next 10 years is expected at 5.5%, which means by 2030 we would have over 7 million cars, and out of 7 million only 25% would be EV, rest all still would be ICE. So
Noted. So, but over that period, it still means that the IC population will not grow. So, does that justify making investments in India for you?
But data shows the IC population in India will grow
grow.
at a lower rate, albeit single digit. The EV would grow at a faster rate, but then there is still growth happening in the IC engine. And surely now it's a question of, do we want to miss the bus there when there is still a growth for the next decade? Because the absolute numbers, when you calculate, as Hardevi rightly said, even with a CAGR growth rate of IC engines 3.5-4% CAGR growth rate, we are staring already at 7-8 million with cars going to be. So absolute number of cars produced is going to go up.
and we are having capacity constraints even today.
Yeah, even today already we have. have capacity constraints for existing demand itself. So rightfully, we will have to continue to invest in some of the IC engine technologies. Also, what's happening is there is a shift that is happening. We are seeing one is IC, second is some of our customers are also graduating to bring in IC with hybrids. Rightfully, the Japanese are doing it, Koreans are also wanting to do it. So we have offerings in the hybrid technology as well. Now that's complementing mine. So IC grows, I have hybrids also competing, so I'm bringing in hybrids. We already have started locally making hybrid products here. Yeah. And then you have the emerging EV that is catching up faster. Now there also we have now entered. We have already one win in our hand, and we are executing that right now. So I'm sure there'll be more. We will continue to work and get more wins there.
How should one think about the bearings part of the business from the same angle, domestic and exports, and how the parent thinks about supply chain allocation?
Uh, as I said, it's more about what India wants to do for India, and that's where we are focusing on. Because we see there's a lot of growth in India itself. Our own domestic business has always been growing at double digits so far. We want to sustain that growth momentum.
For bearings.
Overall, I'm saying domestic business. So that includes bearings, which is 60% of our total business is bearings. The 40 is non-bearings. So we would like to continue to grow. Export, as rightly pointed out, if it happens, we are going to definitely capitalize and grow. We have invested as well. We will continue to build on it. We look at alternate markets, which we are doing already. We already got some wins there as well. But I'm sure you will also acknowledge the fact that what exports we do is to our own sister concerns. We don't give it directly to the end customer, isn't it? So to that extent, we have some limitations, so to say. So that is the second point. The third point is clearly our strategy is not only exports. It's not so. We want to be there, but it's not like at the cost of domestic growth. The domestic is primary growth for us, and that remains, and that will continue to grow. Continue to invest for domestic growth as well.
Noted. Yeah, so that second point you said is where I wanted to understand a little better. When you supply to your sister concerns, how does that decision making take place? Does the parent take a call in their part of supply chain planning that supply should move from India to Vietnam or anywhere in the world versus China supplying or Poland supplying or Vietnam supplying?
It is a joint decision. It is discussed very well, and multiple factors are looked at into. Proximity is one of them. Rightfully, cost competitiveness is another one. Yeah, there could be also the customer's dimension. Customer may want to prefer to source from only one location, not from the location we propose. So everything is taken into account, and this is not like somebody sitting in Germany makes the decision. It doesn't work like that. It is well discussed and agreed upon.
And there are business cases, right? Huge business case behind every such relocation or localization.
Correct.
So various factors are considered.
Noted.
I mean, we have to pitch our business case.
How is India's cost competitiveness versus the other geographies where Schaeffler manufactures?
I think we are sitting in a sweet spot, if I can put it that way. Some product lines we are definitely very cost competitive, and that's one of the reasons we believe India is the place where we should manufacture these products in high volume.
Even versus a China?
Well, I'm not taking China as a comparison at all, because the extent of transparency and visibility of China's costs is something that is not known to any of us.
No, when I say versus a China, meaning Schaeffler's China manufacturing, because then you're comparing cost structures like to like.
Volumes at play are totally different in China. I mean, believe me, all said and done, China plus one or whatever, the world still depends a lot on China.
Correct.
And China, even our own business is 3 times our business.
Which is what I was trying to understand.
So whenever there are
if
volumes,
India's
there is cost competitiveness is better.
So, but I would drive the conversation in a different direction. Today, the entire world is seeing as, can we minimize sourcing from China? So why is the question coming up?
That's what I wanted to ask, sir. Like, like everybody talks about China plus one, but do you actually hear at your parent level saying that, look, we are supplying from China, but we need to shift it to some other country right now?
Partially right and partially not right.
Okay.
When I say partially right, China has been a bigger supplier,
Right.
even Schaeffler China. We are not saying that that should be cut down.
Mhm.
No.
Mhm.
That we already invested there, let it continue to run. In a growing market, the world overall is growing, US market is also growing now. So can we have one more parallel to China?
Mhm.
So it's not at the cost of China,
Mhm.
but
It's plus
China
one.
The
plus
incremental one. The
That's why it's called
incremental
China
aspect.
plus one.
Yeah.
Otherwise, it is
Yeah.
China minus one. No, it doesn't
Yeah.
work like that.
Yeah. And on that, because I think even Schaeffler has invested in the US facility.
Yeah, a new plant.
Right. And incrementally, we are seeing a lot many other companies also investing in the US. So, does that weaken the case for India as an alternative
Not
to
at
China?
all. Not at all. Again, as I said, you can't make every product in every country. And our portfolio is so wide that you can't manufacture everything in every location. So somewhere the optimization and the rationalization of the portfolio will happen. So what products US will be making, at least most of it would be different from what India is making. Correct? if again, look at where the world was. There was a lot of talk about globalization, right? And now there becomes so much of polarization happening. So with that, even this will determine. Now you may want to export, but
Exactly.
the
right,
US
yeah.
may say, sorry guys, I want to make it here. I want to provide employment
Yeah.
here. You can do very
Exactly,
little of
that's
that.
what-
Correct?
So are there any specific products where you would say that India is, globally competitive for
Yes.
Schaeffler?
Yes.
Yes.
Which would be those?
I think the entire range of
Cylindrical.
cylindrical roller bearings, we are very, very competitive.
Okay.
And we have the capability, the competence to design, engineer any kind of cylindrical roller bearings in India itself. So India has become a hub
And even
already.
China buys that from us.
China also buys from us, by the way.
Oh,
We
okay.
export to China the
Okay.
same product.
Okay.
So we do that as well.
Yeah. And you talked about the capex going up to 10% of revenues, but of course, given what we discussed and the kind of opportunities, see our revenues, is what around 700, 800 million euros compared to the global revenue. So obviously, if the outsourcing were to happen, there is a larger scope, which may mean that you might need to even further up your capex. Is that something which is you are thinking about possible?
Again, as I said, our entire growth strategy of Schaeffler in India is driven by India's growth story.
Of course.
It's not an export driven. So
Correct.
if I have to do that, then my entire strategy will be different.
Yeah. But should the opportunity
Because
arise?
then I
for you-
wouldn't look at railways, I wouldn't be having this conversation, because then my focus is on export. It doesn't matter. I'm just product focused. I want to sell this product more in that country. I don't care whether India buys. No, that's not the language you are hearing. We are committed to grow in India.
For India.
For India, definitely. So we are investing in capacities even for India. Export is also there for us, but it's not like that is the deciding factor, and that is a big strategy for us.
It can result out
It
of
can
this
result out.
Europe FTA and those topics
Yeah.
which are
Exactly.
happening.
That's what I'm saying. Should the
That-
opportunity come through for you, would you be needing a lot more capex?
Probably yes.
It may not be at the cost of India.
Yeah.
It
Yes.
need not be either, or it can be and, right?
It can be and.
It can be and
yes.
definitely, and that's exactly the strategy we have done all this while. That it should be an and. And now we hear about the EFTA getting closed. So if that were to happen, and if it is opening up opportunities for us to leverage the cost competitiveness here to give it to the European market on, we surely will capitalize on that.
So on the EV side, last year you said that we have a large win over there on the EV side. The production which was expected by second half this year. So what is the status for that?
We are on track.
And how would be the content for that in that business versus your normal 50 euros in ICE cars, and how you see this going forward for you as you go progress?
First thing is our project is well on track, yeah, and exactly as committed we will be, starting the next step in the project plan will get executed. There's no doubt about that. Coming to the next part in terms of our own investments to localize the production, that would happen in a phased manner, not like I bring in a line and start producing. So we will have to do. Why? Because two reasons. One, this is an entirely new technology for us in India. We never done electric vehicles, so we are learning as well. So in a phased manner, we're going to bring in, and which means our investments also would be in a phased manner. We do that. That said, we're not stopping with this one win. So we have clear plans to work with other customers to generate more such business wins. We are working with quite a few customers. So as and when more wins come into, we will again revisit our investment plan, because with more business wins, obviously that would accelerate our investment plan as well, rightfully, because we are getting the economies of scale now coming into play.
On that I agree, but even by including imports currently, because obviously now the volumes are not high, but even including imports, what is the Schaeffler content in overall car?
Okay, coming to your content now, that's where I had a question. When you say content, is it the content per vehicle that you're talking about? Okay. And it's a little tricky question. So how do you measure content per vehicle? Because it's on the vehicle park number, correct?
Right.
Whatever vehicle gets produced, irrespective of what technology it has, which means you need to bring the IC engine numbers into play as well and calculate the CPV. Then it distorts the entire picture. So as you know, our own content per vehicle on the IC engine, we are in somewhere around the 50 euro range, correct? Now, do you include the large population of 4.5 million, passenger vehicles that is there already with IC engines as part of the calculation around EV technology? Is that the way? Because then your content per vehicle is distorted.
No. I'm just comparing like to like with
Like to like, it's simply put like this. See, here I supply a component today to an IC engine. It could be a wheel bearing, it could be a shock absorber strut bearing, or it could be some, clutch release system, or it could be some rocker arm on the. But it's a component, okay? Here in the EV, what am I offering? I'm not offering a component. I give a complete system. A motor with a gearbox with a temperature control module and the controller which goes with it, because you need the electronics and the software to control the entire mechanism. So it's a system level offering. And so obviously the system level offerings, the value is much higher. If I am in 3-digit here, I would be in 4 or 5-digit here. So apple to apple, you can never compare it. From a few 100 rupees, and now I'm talking big.
But that will include a lot of bought items.
Even today, it depends on how you want to see it. Even today in a bearing, I don't make the cage, I buy the cage. I don't make the grease, I buy the grease. I don't make the seal, I buy the seal. I only make the steel part which is machined. Even there I buy the component. Turn rings are bought. I do the value add is, my core competency is where I bring in that value. The same applies there as well.
Sir, how much of your current sales, both on domestic as well as export, is purely on IC based products?
No. Repeat the question, please.
How much of the domestic sales as well as export sales is at a risk from EV? Basically, it's completely
the
IC
risk
based.
part of it. Now again, I'll have to look at it from the sector.
Yes.
Okay. Do you want me to take two-wheelers or passenger vehicles?
Passengers.
Okay. Immediately, I don't see a risk. Not for at least 10 years. Why? Because I did share already the data that IC engine still demand is going to be there in India. Even at a slower growth rate, you still have the base volume is so high, correct?
If I take it other way, in that €50 per vehicle of content, how much would be purely something which is engine based?
Oh, you're talking about the content per vehicle. Sorry,
Yes.
I misunderstood. So, I don't have the precise data. That's the wheel bearing if you separate out the chassis and then the engine part. I don't have the precise data there. The split in the content per vehicle between the chassis application and the engine application, I don't have it now. But clearly, I must say, just a very wild guess I'm throwing here. Probably it could be in the range of 80-20, probably. 80 being the engine.
Okay, and that similar number would be for exports?
We don't export anything on the automotive side.
On the IC side, nothing. Because you also mentioned that some of the engine-based technologies are going out of Europe and coming to the emerging markets like India for manufacturing side.
The production lines there, as they phase out and move to new technologies, correct? That line was also supplying to India. We were importing.
Okay.
Now what I am going to do is, anyway they are phasing it out, I bring the machines here and produce it for my use.
Okay.
That is what is happening.
So exports are not on the engine side. Exports
No, there is no export on the automotive side. Let me put it that way.
Okay.
Automotive side we don't, because automotive, the model is every OEM company has its own supplier base in that location where they set up a plant. That's how they operate.
So most of our mobility sales exports would be railways.
Not mobility. Okay, you're defining mobility.
You have mobility and non-mobility exports given
Not
separately.
even railways. It's on the industrial side, core industrial side.
Okay.
Core industrial side. Because look at the product portfolio. We export sphericals, we export cylindrical rollers, which all go into process.
That would be
industry
classified non-mobility exports, right?
Yeah, that's what I'm telling you.
But mobility export is a bigger number for you.
But I don't know where you're getting the number.
I think
mobility
that
exports.
segmentation, the way it is done based on, I think, ratio proportionate, because the group does not tell us where they are reselling.
Okay.
Yeah,
So
because
I
I
think
don't
there
know
we
where
have to
the
do the
sale
ratio
goes.
allocation.
When we do an export business sale, I sell the product to my sister company. I don't know who the end customer is. I don't know which sector it is going to as well.
Okay.
I have no visibility to that.
Okay. I was just referring your disclosures. That's why.
The segmental
Yes,
bifurcation.
mobility.
That is ratio proportionate.
Oh,
That's
guesstimated
how,
that.
based on our domestic, whatever is the ratio, you have to apply that same ratio, because that's what the format mandates.
Okay.
Globally, there is evolving technology of bushings, which potentially become a substitute for bearings in wind applications. Uh, is that also a segment that Schaeffler has been looking at, and any view that you have on how that can evolve? That can potentially also increase content.
I don't know about whether it will increase the content, but definitely we are evaluating that as well. We are aware of it. Some of the wind turbines, they are moving to bush instead of high precision bearings. There is a reason for that, because as the wind equipments become larger, the need for bearings also is growing in diameter. We are talking now in the range of 2 meter in diameter. That's a huge bearing. So the cost goes up dramatically. So some of the wind equipment manufacturers themselves are revisiting the design, and they are now trying to reduce the speed and use a bush bearing. Okay? It's a proven technology, but not everyone has adopted the technology. Correct?
Got it.
And we are aware of it. We are also evaluating. So should we also consider bush bearings? We'll see as time comes how it changes.
Got it. Where does it stand in the technology curve today? As in that's the direction the market is going in. So it'll just be a slow adoption.
It's a slow adoption.
Okay. But that directionally, that is where
It is there. It is there. A couple of our customers are also talking about it.
Okay.
But we are yet to see. In India, at least, I have not seen even anyone going in that direction yet. But I guess it will happen. I think, most of these new technologies get proven first outside of India.
Correct.
So-
I meant more from an export angle or outside India only.
Yeah,
Like if
so
you're hearing about-
the development, the testing, and the use begins to happen outside India.
Hmm.
Then once it is successful, then India becomes there, because then the cost competitiveness pressures build in. That's when they look at India. Till then, it's still okay to make it there and use it there. So it is there. We have heard about it. We are aware of it. But right now, if you ask me, are we going to get into it? I have no answers to that.
Briefly, if you can touch upon the aftermarket.
Which one? The automotive or the industrial? Okay.
Hoover's acquisition that you did. So
Coors.
Yeah. What would you like to know?
how's the growth post the acquisition?
So this year at least, I don't know if you had chance to go through the consolidated financials, but last full year in the calendar year, Coors was over 70 crores. This year we expect it to be 2x. And I mean it's more to understand why we went for that acquisition. It is a B2B platform. So it is not only about topping up or inorganic growth. It is also to penetrate into the service market, and thereby we will be also able to serve our products. Um, and major advantage is on the power of data. So because it's the e-commerce platform, we come to know which kind of products for which brands of the car, for which model of the cars are being ordered on this platform. So you get the power of data. So you get a lot of data transparency, that what is happening in this car park space in the aftermarket. So these are the things that we are looking at when we look at Coors.
So on the railway side, where exactly is our product used? Like, is it used in the locomotives, or where does it go?
I guess our portfolio is cutting across all applications. If I were to start with the electric locomotives, the traction motor is one of the biggest areas where, because the traction motors, they run on high voltage, and rightfully you will need bearings with insulation coatings, and we make those products here in India. So that's one of the big business for us. And with the way electrification is growing, the demand for traction motors is increasing. So that is one application. Apart from that, of course, you do have some journal bearings, some gearbox bearings. So they are the standard cylindrical roller bearings which we make, which we also supply. Outside of that, if you look at the wagons, whether it's a freight or the passenger wagons, you will find the axle boxes, the bogies where the wheels are there. So we supply the axle boxes completely, not just the bearing, but also with the axle box assembled. So we do that as well. Same is the case with metro trains again. So our portfolio is there. It's not that it is not there. We have been there and we've been doing. Now with the improvement that or change that we are seeing in the railway as a sector, we believe that more and more new, better products, technology products would be required. We are talking about Class K as one of the bearings, we believe, and rightfully our products are getting homologated as well. So the key to railways is to localize, because they are very particular that we must produce in the country, and that they are very clear about. So definitely in that direction our strategy to invest is there, will continue.
So today we are around 7% of our revenue is from railway. So given that so many orders have been placed in the last 2-3 years, so is it reasonable that this proportion should go up going forward?
Well, the percentage you are referring to is assuming the other sectors don't grow and only railways grow, isn't it? What if the others also grow along with it? 7 will remain 7. So to me, it's mathematics. So to look at percentage as a percentage may not be the right way. Absolute numbers, are we growing? Yes, we are. Can we do more? Surely we can do more.
So why I was asking is that due to change in product mix or due to change in customer mix,
will there be an impact on margins, like, or operating margin? Because railways generally it's a tender-based business. I don't know how it is for us, but so will it be like margins will be lower in this segment?
I think the way we should see is railway is not purely tender based. The core Indian railway business is tender based, but metros are not. Metros are not. And also railway is also transforming now. You know, they have outsourced now. The complete wagon manufacturing is privatized. So there are a lot of private players who come in. What we are seeing is the way now the business is going to be done is changing. So with private players coming in, you know, it is opening up room for us to make the sales pitch. It's not just participate in a tender. We can have a discussion and we can position our product. So there's room for conversation. That is happening. That is happening.
So lastly, from my end, sir, so then we are operating margins are right now say 18-19%, right? Historically, they are quite high. Earlier, we used to operate at a lower level. So should we expect these numbers to maybe sustain at these numbers, or go down, go up, or is it good enough for us, like 18-19 is good
Your
enough?
wish is our wish.
We wish to have more.
Sure. That's why I said, if you wish that we should do more, we will do more. We have to do more.
So this, at least this much can sustain.
No, surely, because we are also, you know, committed that we want to deliver back to our stakeholders, our investors. Definitely, we want to keep that. So, hence, you'll see that you may pose questions. Why are you not in this sector or in this application? You are weak. There's a strategic reason why we keep away from some of the applications in some of the sectors. We believe no, it's better to, you know, not. We will have to address those things in a different way, but not by compromising the margins. That we are clear about. Yeah.
So this Bitesco, I know it's too premature from an overall perspective, but I mean, I'm not aware if they are present in India. What's their size in India? Is there anything?
Just to share with you, yes, they are present in India.
Right.
And in the space they are operating, they are quite a significant player.
Okay.
Yeah. Strategically for us, this is one of the biggest wins going forward. Especially with the market moving towards EV. You can make all the products which use mechanical methods, you know, which we are good at, like motors, gearboxes. You can make all of that. Even the thermal management module, which is a lot is on plastics and molding. So you can do all of that. But the controller, the electronics, the software coding, that's a different ball game. So that was something missing in our portfolio, which now has been closed. So that is also enabling us to offer the complete system rather than just offer a motor. Because ultimately, if you look at the controller, that's where all the intellectual property is lying. And today, that is with us.
Sure.
So in India, yes, they are present. And I can only see that this is going to enable us to grow more stronger in future in the electric vehicle space, clearly.
Would it be possible to share what's their revenue size in India?
Well, we have just started the dialogues now. The acquisition process is getting completed. So we have started to engage with them now. The discussion process has started. So right now we are still at a very nascent stage, but I'm sure you will hear soon.
Sure.
Will OEMs do this in-house kind of controllers and motors, or they kind of take it from an external party?
See, ultimately, if you look at it, it's all about investing in that capability. If the OEM wants to do it, they can do it. But are they doing it? We don't see them doing it. Because they believe that the controller is an area where only a specialized company knows it. It's their domain area. Now that said, also look at it from the risk angle as well. The controller is the one that determines, and this is going on a car. Now if the software has a bug, you can imagine what would happen to the performance. So the stakes are also equally high with this offering. So I think this is a very specialized area, and Not many players are there. I'm only talking about the power electronics part. Not many players are there.
Sir, one of the question these days has become customary with all the international companies.
Sorry, what?
Uh, our market cap is somewhere around 5 billion euros.
Okay.
Parent is at 4.2 billion, so we are higher than the parent's market cap. And of course, we have seen what one of your peers has done in India, where they have sold down certain estate to deleverage.
Was that good?
It doesn't matter, right?
Same way, it doesn't matter, right?
They had to do what they had to do, right? So, I mean,
So what's the question?
if you can give any color, are there any such
Nothing.
discussions?
It is what it is. You guys have infused so much confidence in the Schaeffler brand. We really appreciate that. And it's not something we did. You guys have really put it on a pedestal. So it's good for us. We really feel honored. But what does it do to us as the management team? Is it has raised the responsibility that we have to live up to your expectations. So we are putting all our efforts to make sure you keep us there.
But does the parent want to say that, okay, let's...
The parent is very proud of us, by the way.
Let's
They are
use
very
it to
proud of what
deleverage
good work
ourselves.
we have done. In fact, they ask us, how the hell are you guys doing it? I said, I don't know, I don't have a magic wand. We are working hard, we are doing it. Yeah. But beyond that, I think there's no talk of it. We don't talk about it. They have their space, they have their own priorities there. We have our space, we have our priorities here. So we
Because
have
there is a
to-
decent leverage on their book, and if I am not wrong, they are double.
Are you
B
suggesting
rated.
something?
I am asking. I am not suggesting, I am asking.
No, nothing whatsoever, none of it.
With Vitesco AG, the scene is changing, right? With Vitesco AG's valuations now getting
Yeah,
in there.
I guess that's going to change. A good point.
Mhm.
Vitesco also was a listed company there on the DAC. So now their valuation was higher in Germany. Now with the acquisition, probably you will find that parity gap.
Okay.
Yeah, time will tell
Time will
how,
tell.
how it is playing out.
Yeah.
Right.
But the good thing is this Vitesco has been a very good strategic win, I must say. Because this was a big gap, and it was a struggle in front of the customer. I think that is behind us now. That is behind us.
So one last question. Sir, do you see the possibility of improving margins? Because last 1 year has been little weak on margins. As the demand recovers 1-2 years, do you think we'll have some few basis points further improvement?
We will make every effort. I wish our customers keep giving price increase every year. If it were that easy. But
No, because
jokes
scale
apart,
also
but jokes
helps
apart,
you.
I believe our commitment remains that we want to deliver sustained profitable results. And we have done that. We have shown in the last 5 years what as Schaeffler we can do in India, correct? And so definitely all efforts will be in that direction to continue to sustain the profitable growth story. We will do that.
Just allied to that, basically exports I believe will be fairly profitable, and that's been weak. So is that primarily the thought?
Well, it's been now 3 quarters or 4 quarters down. Three quarters. Have you seen the impact?
No, what marginally, I'm just trying to
Yes,
follow the
pressures are
same
there.
question.
It is definitely building the pressure. But then we are working hard in the other sectors are also profitable. It's not that even the domestic businesses, we have quite good profitability there. It's not like it is bad. Look at distribution, our aftermarket business, automotive as well as the industrial as well. So we are committed to grow that as well. So that's where the focus is now. How do we grow the distribution business, which offsets the impact of the drop in export business? It's something we are clearly focusing upon. And last year, compared to previous year, we have seen already a growth in the distribution business already. We have seen. Okay.
How big is auto maybe?
Okay. 800, 900. No? Automotive
bearings.
Automotive bearings you're talking about. Oh, no. That,
It is 600 crores, right? Automotive bearings. BD,
No, no.
BD
BD bearings come. Yeah.
It's 600
But that is,
crores of,
you're talking about automotive bearings or automotive aftermarket bearings?
No, sir. Automotive.
Then it is 600.
Yes, it is. So it is close to 8 to 10%.
8 to
10%, and then plus the aftermarket.
Yes.
Yes.
That'll be another 10%.
That's overall 10%. No?
Overall, it is total is
automotive aftermarket overall, because
There
it
are
contains all the products.
Within automotive aftermarket, bearing portion is still lower.
Lower,
than-
correct.
There it is more clutches.
Clutch is the biggest portfolio. Okay, thank you. Thank you
so
all.
much.
Thank you for your time.
Thank you.
Thank you. Good to see you. Thank you. Good to see you too. Thank you. Next time. Thank you so much. Thank you. Nice meeting you. Thank you. Thank you. Thank you. Thank you so much for your time. Thank you so much. Thank you.
Thank you.
Thank you. Thank you. Really.
Sir, I must say, one of the things that I found disappointing, I went through the entire concall transcript of Schaeffler Group. There was not even one mention